Now, just to help me out, a bit of 101 monetary policy. You said that you have borrowed $50 billion from government through the bond market, and and I think 19 billion through the international market. Is that what you said?
No, the Reserve Bank doesn't borrow money. We bought in the secondary market $50 billion of government bonds, both issued by the states and territories and the federal government. And to date, we've lent $5 billion to the banks through the special scheme, and we're prepared to lend the banks up to $100 billion. So the Reserve Bank hasn't borrowed from anyone. We're the ones buying and lending.
Yeah, sure. So you mentioned $19 billion in a bond sale.
The federal government issued, the ALFM issued a new 10-year security 2 weeks ago and raised $19 billion. And there was demand for maybe $50 or $60 billion investment. So that's not the Reserve Bank doing that, it's the financing arm of the Treasury, the ALFM.
Okay, so in terms of, and just to help me out here, in terms of the government making money available for things like job keeper programs, that's a separate activity to what the Reserve Bank is doing. You're trying to provide liquidity into the financial system. The source of your money to do that is what?
The source of the Reserve Bank's money. This is the beauty of central banking. Central banks are unique entities in that they can create money.
Okay.
You know, when we go and buy a government bond off a pension fund, the way we pay for that is credit what you buy from a bank, credit the bank's account at the Reserve Bank. So we are the one entity in the country that can create money illegally, just out of nothing. So that's why it's incredibly important that the governance around that process is very strong. And I think in response to Senator Wish-Wilson's question, the separation of monetary and fiscal policy is kept, because we've seen where that has not been maintained. Obviously that could be abused. That you can just create money out of thin air and finance government expenditure without checks and balances. So
sounds like a great job, if you don't mind me saying.
Well, this is why the governance of it's incredibly important, because the central banks, you know, it's mainly about interest rates, but the central banks are the one entity that can create money out of thin air, and that's take that responsibility incredibly seriously, and it's not to be abused.
Thank you. How does the international outlook adjust your thinking in terms of monetary policy? So obviously you're tracking what's happening here and looking at numbers of our employment and a whole range of other factors. Obviously, as a trading nation, and with some pessimism that has been expressed, even by you, but also by the Treasury Secretary and the Chief Medical Officer about the international situation, how do you think that's going to affect us moving forward?
Well, obviously, if the global economy is weak, that's going to play back on us here. So it's one of the reasons why I'm quite concerned about the next year or so. You know, there's going to be a shadow on our own economy cast by the pandemic. People are going to be more cautious. They don't want to borrow. They make sure the property market's changing. So there are a lot of kind of domestic ramifications, and they're going to be amplified by a weak global economy.